Hello, Vision Nation. A quick announcement. So far, we've been doing weekly episodes for the show, but I'm going to start releasing new episodes once every 2 weeks going forward. I want to make each episode as good as possible, and the best way to do that is to put more time into producing each episode. So please bear with me as we go through this transition. I think you're going to love these fresh new episodes, and I hope you don't mind that they're going to take a little bit more time to put together. Alright, in this week's episode, we're going to cover Linda Raschke's story. Linda is not one of these super famous investors, but she has a great story of how she got into the investing industry, and she's even started her own hedge fund in the early 2000s. At one point, her hedge fund was ranked 17th out of 4,500 hedge funds for their best 5-year performance. So you know she's the real deal. She was so committed to trading in the markets that she traded right through her pregnancy and even executed a trade 3 hours after her daughter was born. Join me to check out the story of how she originally got started in investing. Welcome to Wall Street Vision. This show is on true stories about the markets and top investors. I'm Vlad Dolgochev. This show is for informational purposes only and is not investment advice. Check out the show notes for the full disclaimer. Linda Raschke originally started trading stocks because of her father. He loved to trade and invest. Her father wasn't successful in making lots of money, but he would involve Linda in his research process, and she would help him look through lots of stock charts looking for specific types of patterns in price and volume data. They spent quality time together, and that sparked her interest in the markets. In college, she took part in a program where 10 students were selected to manage a trust set up by an anonymous donor. She didn't know much about the markets. At the time, the college kids made their decisions based on fundamental analysis, so looking at the company's cash flows, balance sheets, and that type of thing. This is where she realized how fun investing can be, and that's where her lifelong passion really took off. She knew she wanted to become a stockbroker after graduating college. She was fascinated with the markets, and she had a gut feeling that was the right career path for her to follow. Now, the only problem was that she couldn't get a job, even though she applied at every single brokerage in San Francisco. No one was taking her seriously because she was this young girl who just graduated university, and at the time, trading and investing was an industry that was mostly dominated by men. She ended up with a job as a financial analyst at this paper company. Now, the good thing was that her office was close to the stock exchange, so she would go to the stock exchange every day at 7:30 in the morning and spend some time there before she went into the office. She learned a lot just by asking questions, talking, and observing. She realized that a lot of the traders came from all walks of life, and a bunch of them were even surfer guys from the beach. You didn't have to have that super high IQ to be a successful trader. Now you gotta remember, back then, a lot of the trading was still done in person at these places called exchanges. And when I'm talking about exchanges, I'm talking about those huge rooms where you had lots of people crowded in front of computer screens, and they're all screaming and there's paper all over the floor, that sort of place. So Linda would hang out at one of these exchanges in San Francisco. It's so cool that she saw something that she was interested in and then went after it with a lot of passion. Linda wasn't intimidated by how male-dominated the exchanges were at the time. She just figured that this is something super cool that she found really interesting, and she wanted to give it a try. She became friendly with one of the traders there, and he taught her the basics of options. Options are a kind of financial instrument or a financial contract. I'll briefly describe it a little bit later in the episode. That trader was so impressed with Linda's quick learning and her interest in the markets that he gave her a trading stake. This is how a trading stake worked back then. It was essentially a partnership where she was the general partner and he was the limited partner. He put up $25,000 that Linda would use to make trades, and they would split any profits 50-50. The benefit for Linda was that she got a bunch of capital to trade with, and the benefit for the guy giving her the money was that he could sit back and enjoy half of the profits from her hard work. By the way, the type of trading that she was involved in was usually short-term oriented. So far on the show, we've mostly covered buy and hold investors who look at the business characteristics when choosing which stocks to buy. In Linda's case, she was using what is called technical analysis. This is a different style of investing that is usually more short-term in nature and is oriented on analyzing different charts like price charts, volume charts, and so on. Her original strategy was mostly about buying underpriced options and selling overpriced options, and then hedging her positions to control her total amount of risk. Options are essentially a type of financial contract. The market was not super advanced at the time, and someone who was really well grounded on how to value options could do well. In those times, there were lots of inefficiencies that could be exploited, especially if you had a small amount of startup capital that you were working with. Little inefficiencies are easier to find than big inefficiencies. So if you're only investing $25,000 like she was, it was easier to find these pockets of the market that were mispriced. And when she found those pockets of the market, she would buy low, sell high, and keep the difference. In her first 3 months, she made around $25,000, doubling the money that she started with. It was all going very smoothly until one day she saw this company called Cities Service. There was demand for their options, so Linda started selling calls because she was able to overprice them, and lots of people wanted to buy these calls. Calls are a type of financial contract. Let's take a quick step back for any listeners that need a refresher on calls. A call is a type of financial instrument. The way a call works is if Linda sells you a call, you'll pay her a small fee to buy the call. Once you own the call, you can profit if a specific stock goes up in price. So when you own a call, you benefit from the stock going up in value. When you buy a call, you're kind of making a bet that the stock is going to go up in price. Also, the call has a certain shelf life, so if the stock doesn't increase in price within a certain amount of time, then the call can expire worthless. Now, if the stock rises in price, you make money as the call owner, but in that case, Linda would lose money because she's the person who sold you the call. One last thing before we move back to the story. The reason people buy calls is because they have an element of leverage. The potential profits are a lot higher with calls instead of just buying the stock. Alright, so Linda was selling lots of these calls, and she was making a small profit for every transaction. The city service company was the takeover candidate, which meant that if the takeover went through and another company bought them, its stock would probably have a big jump in price. People buying calls thought that there would be this big price increase, which would make their calls worth a lot of money. They thought that the company would have an announcement saying that they were getting bought out. So at the time, the stock was trading at $32 a share, and Linda figured that as long as the stock didn't go over $55, she'd make money. The afternoon before the options expired rolled around. One more day and she's home free with a nice profit in her account. But then all of a sudden, the stock jumped from $34 to $65, and that caused her to lose $80,000 in a few hours. So she went from having $50,000 in her account to being negative $30,000. And because she was the general partner, she was personally on the hook for all of that money. Imagine the stress of that. Just starting out in your trading career, being 22 years old, and 3 months into your job, you lose a ton of money, and you're owing more than what you started with. Plus, she also had $10,000 in student loans. What do you do at that point? Do you leave your finance career, change your name, and move to Mexico? Before we dive into what happened next, I'll quickly mention that if you're enjoying the podcast, please subscribe using your podcast app. And if you know someone who would find this content valuable, please share this episode with them. My goal for the podcast is to help people learn the lessons from the best investors and to help people understand the stock market better. I think that's important today as there's lots of information out there that can lead people on the wrong path, and I would love for more people to benefit from this type of content. Alright, back to the show. Instead of quitting and vowing to never trade again, Linda regrouped. She told herself to relax and started rationalizing the situation. She saw traders around her lose millions of dollars in sudden takeover situations like the one that happened to her. And she figured that if you can lose money that quickly, there's got to be a way to make it back quickly as well. She looked for another financial backer and luckily found someone that would give her the money to keep trading. Even though she was in a crazy situation, she didn't let it faze her. She kept working away, building up her confidence with smaller trades, and slowly but surely her skills kept on improving. She kept on getting more and more consistent and earning more and more money. Linda went on to spend 6 years as a floor trader, and she made tons of money along the way. Then disaster struck again. In the mid-80s, she had a really bad horse riding accident. She fractured her ribs, punctured a lung, and dislocated her shoulder. After recovering from her injuries, all the standing on the trading floor was really uncomfortable. Instead of quitting, she figured that she'll just start trading from an office. At the time, there wasn't a lot of trading done in offices. Most people did it physically at the exchanges, and some people thought that trading in an office would be a disadvantage. Linda figured out how to make the best of her trading situation and learned to optimize her trading away from the trading floor. She has such an amazing will to win and to pursue her desires. Her trading career led her to open her own hedge fund. She still trades today, but she does it in her own account instead of managing other people's money. And another thing that's really impressive about her story is that she suffers from a medical condition that makes her have a chronic loss of energy. But you'd never know that watching any of her interviews or looking through her investment performance. So that's Linda's story. From a catastrophic start to her career to having a hedge fund that had great performance for a long period of time and still trading in the markets today. Next up, let's get into some takeaways from Linda's story. The first is that you've got to understand that learning the markets can take years, and having total immersion in whatever style of investing you're trying to learn is really important. Linda always recommended getting as close as possible to other successful investors in whatever style of investing you're trying to do. When Linda was first starting out in investing, she couldn't get a job, even though she applied at all of these different brokerages. So what did she do? She just went to the stock exchange and made friends until one of the people there decided to give her a shot. That persistence that she had and the curiosity that she showed made a huge difference. I think if you show enough passion, you can follow your dreams, even if there seem to be these roadblocks in the way. Now, the second takeaway is that technical analysis can be a valid way of investing. So far on the show, we've covered investors that mostly do fundamental analysis. And what that means is that they look at the company's fundamentals like cash flows, balance sheets, and so on. Technical analysis is a little different. Technical analysis looks more at charts and price history and volume information and stuff like that. So Linda Raschke in her career uses primarily technical analysis to make her investments. And what I've learned recently is that there are a handful of very successful investors that have used technical analysis in their career. Alright, Vision Nation, that wraps it up for this week's episode. If you've enjoyed it, please hit the subscribe button, and if you know someone who's interested in investing, please share this episode with them. Thank you, and I hope you have an amazing day. This podcast is for entertainment purposes only and should not be relied upon as the basis for investment decisions. Before making any decisions, consult a professional. I may maintain positions in the securities discussed on this podcast. This show is copyrighted by the Wall Street Vision. Written permission must be granted before syndication or rebroadcasting.